What's going on, traders? Welcome back to my channel. I just want to elaborate a little bit more on the video that I was trading live and kind of analyze the rest of the day. But the first trade that I took was this second entry long. But why was I looking for longs at that point? Well, the day started looking as a trading range, but the key factor to notice here is the big bullish move up. When you work into trading range higher, you can expect probably to break higher. If you work into trading range lower, the most likely break is going to be lower. So at this point, when I saw this big bullish leg move into the trading range, even though we were quite close to these highs, I was still looking at the opportunity to go long. This channel has not been retested yet. This was the first break of this channel working higher, and it is a first entry pullback, second entry long. Market moves into two-legged pullback, and it's off the EMA. EMA serves as a key entry point at this point. So at this point, it was a good enough for a quick, easy scalp. Now, prices broke above this key resistance level. I marked this as a buy side liquidity. What is buy side liquidity? Basically, buy stops, buy orders ready to go long on the break of the market. And all these buy stops have been swept during this break. They have not been purged, they have been swept. And what does swept mean? Well, the orders are swept if the current daily bias bar is bullish. This is the daily chart, and you can see that the previous few bars were bullish. So we can expect the day be bullish as well. So that's why those orders were swept and not purged. But I don't think you just want to go short on this first break higher, because it's much higher probability for wait for prices to pull back and wait for a lower high at this point or lower low. This was a lower high from this point. It is a retest of the previous resistance. I didn't take this trade, as you obviously could have seen on that video, but nevertheless, I should have taken it. It was my mental mistake. It is a good short to go here. And you can see, you can draw the trend line. You have to draw the short-term trend line. The prices are now working lower. After sweeping of buy-side liquidity, I've been now looking for shorts. So when the prices bottomed out here, you got a trend line working higher, you have a break and a new high. And this is a first entry, pullback, second entry. So this is a two-legged pullback to the trend line, two-legged pullback to the EMA. So EMA holds, trend line holds, and it is a second entry. So three key factors of the strategy are now screaming at you to go short here. It was such a good trap that my limit order didn't get filled and I missed this trade, but this was a good proper entry. And then the prices came back, retested, made a triple top. The correction, once again working higher. You need to draw the short-term trend lines if you're a day trader to keep you on the right side of the market. You have a break, you have a new high, and the triple top is holding at this point. And now I'm still waiting for a new low of this trend line. Actually, the signal bar is supposed to be here, signal arrow. And the market now moved down. You know, it was good enough, easy enough for a scalp. But at this point, since this is a trading range, I am expecting prices go up and down, up and down. I'm expecting prices to go down here. But notice, this is very important. Notice how the prices didn't make it on the first attempt to these lows. So this was, you know, this should have caught your attention. And when the market second attempt failed as well to make these lows, now you have to abandon your trading rules, you know, strategy, and you have to focus now on going long. Because if this was a proper range day, the prices should have easily bottomed down here at this key level. But prices 2 times failed, and look at this big gap from the support. You know, this shouldn't have happened if there is enough, you know, bears in the market. And also this confirmed that the daily boss, this is basically when you look at the daily chart, you can now get kind of an idea that this really is probably going to be a bullish day. So how do you trade it? How do you find the opportunity to go long? Well, the same as always. You wait for key entry points and you wait for second entries. So prices made a new low here, they're working higher. First entry to go short, first attempt by the bears to go short, it failed. It serves as a beginning of you drawing your trend line. Prices are working higher above the EMA. The EMA is holding, is not letting prices to go down, and trend line is holding and not letting prices to go down. And it is a two-legged pullback on the EMA on the trend line. 2 attempts by the bears, and market moves in twos, always remember. So this was a good opportunity to, if you connected with the daily bars to go long, you now confirm the opportunity to go long, and you can see prices are working higher. At this point, I always teach you not to go long at the resistance and not to go short at the support. But why was this two-legged pullback? Once again, always remember, market moves in twos. Two-legged pullback, you have a break, new low. It is off the EMA. EMA is holding. I just removed the EMA, and you can clearly see that it's much harder without EMA to recognize where the prices are most likely to continue in, after the correction, to continue in the direction of a trade. So I'm going to put the EMA back. But the reason why this two-legged pullback to the EMA into the resistance is a good long is because the fact that the trading range, we didn't make it to the lower side. We didn't make it to support. We made a big gap here, 2 attempts failed, and it is a clear sign now, as the prices spike through the EMA, that the bears have no control over the market. So this was a good, you got a little bit more room, regardless, but you want to abandon your bearish beliefs at this point. From this point, this was a key indicator that the prices are not making it to the lower side, and the bears have thrown the towel. And this is what you can see. The prices broke higher, pull back at the key level. Prices will retest the key levels. This is just a first entry for us as day traders to go long. I'm betting there was a lot of institutions that went long here, but I'm a big fan of second entry, so I don't think you want to go long here. It is a very tempting, but at this point, yeah, I kind of still think you want to wait for a second entry, so you kind of have to watch this setup to go higher. And at this point, market is pushing higher a big time. At this point, market is feeling very overbought, so there is no surprise that there is correction. But you don't want to just go short, because remember, the daily bars was up. The daily bearish candle was bullish, and probably 2 more candles before that. So the only reason why I marked this short according to our rules is because this swing confirmed, not confirmed, set up the trend line, and we got a confirmed bounce off the trend line. This is a first entry pullback, second entry, EMA is holding, trend line is holding. I'm not the big fan of shorting this, but it is according to the rules, and you cannot cherry pick, excuse me. So I have marked this. But since the daily bias was up, I would be still waiting for possibility to go long at this point. But after a big move like that, this is very steep move. If you look at this, this is almost this is like 80 degrees. So there is going to be correction. There's no doubt that there's going to be correction. People are going to take their profits and they're going to trap a few more shorts. So there is a chance to just get a quick scalp. It is off the trend line, and once again, trend lines work phenomenally. You have a break, you get a 2 legs to a new low, and notice this: the legs are measured. There is a rhyme and reason to everything that happens in the market. And notice how this previous resistance now acting as a support. Prices came all the way back to retest this level. And I guarantee you, all the people that missed this breakout, all the institutions piled up right here. They just touched it barely, and no hesitations. This must have been thousands of contracts, institutions banking their orders right here, waiting for prices to go back into this key level. So once again, this is no good setup for us to go long. This is a horrible signal bar. But once you trap all these people going short here, there's actually somebody going short into this, proven key level. and they don't understand how to read the price action. And you actually, once it reverses on them, we can be basically buying their pain. You know, the market spiked up on them, so this was a bad idea to go short into this key level. You have a break of this trend line, 2 legs to a new low. You know, this was a very good long at this point. Now the prices are kind of chopping along through the EMA. The EMA is flat and it's kind of in the middle of those bars, so I really think you want to, you know, stay on the sidelines during this consolidation, because the proper way to buy low and sell high, you don't want to, you know, chase the market. So I don't think, even though it worked and it's off the trend lines, a few setups here, I still think you kind of want to wait. And once the prices came back, and then, you know, the support is clearly now holding multiple attempts, you know, and the daily boss is up. These basically, this is a double bottom, triple bottom, quadruple bottom. These triple and quadruple bottoms were good entries to go long, in my opinion. You probably wouldn't have been trading at this point, because this is 21.53 and the market closed 23 exactly. So yeah, this is only 1 hour before the close, so it's not, you know, I recommend you not to trade before the close, because, you know, the market can make some crazy moves. But, you know, just remember, these key levels are very important to find, and there is a rhyme and reason why prices are acting a certain way. And that this was a big factor, you know, that the prices are now in a bullish trend, because we should have clearly make it, if this is a proper range day, we should have clearly make it higher. And I forgot to mention this, I drawn this earlier. Which basically, as you can see, now added more weight to these setups right here. So there is a rhyme and reason why prices act a certain way, and if you study the chart enough and you immerse yourself in it, you can actually, you know, figure it out how the institutions trade. You can follow them. This is basically what I'm doing. I'm just a day trader, I don't swing, so I just follow the institution and I follow, you know, their steps, because I don't know what they're gonna do. You know, they have the deep pockets, they know what they're gonna do, whether they're gonna sell or buy, but I don't know what they're gonna do. I'm just gonna follow their footprints and, you know, get a little bit of money of what their move that they're making. So let's go zoom in a little bit more. The big shame was I missed this trade. This was a good trap, and at this point I was still, you know, thinking I could get a few more scalps to the short side. But nevertheless, from this point, you know, you have to reverse. The daily boss is up and the trend is now working higher. All these buy stops are now getting swept. Excuse me, sell stops. And that was it for today. So I'm gonna wrap it up. Just remember, keep studying your chart. This is doable, and I'll see you guys in the next video. Have a safe trading. Bye guys.